in a recently published report by Imara, SubSaharan Africa's FMCG sector report reflects significant growth prospects in the consumer market, which still remains relatively underdeveloped when one compares it to the developed world. For more, we are joined by Kura Kadungure. He is an analyst at Imara. Kura, thank you so much for making the time to join us. Of course, if we're looking at the growing consumer market, it must mean that the FMCG sector is attractive. But perhaps give us some insights about how Sub-Saharan Africa is comparing in terms of its attractiveness to other emerging markets.
Well, I mean, certainly at this stage, it is a bit testy.
Right.
But that's mostly because the market does see those growth prospects. It gets a bit tricky trying to convince somebody or to justify such high multiples, especially in an environment with inherently more risk. As you mentioned, it is less developed, and generally at that stage of a growth phase, you expect niggles and well, let's just say that a great more volatility.
Right. But Kura, I mean, we've also had commentators picking up on the 2 points you've made now about risks and extremely high margins and saying, well, maybe this sector is actually, a bubble sector, if I may call it that. How do you respond to that view?
Well, I mean, initially when we published our report at that stage, when we were looking at the sector possibly shedding 7%,
right.
That's what we thought, that if we look at the prospects going forward, and we wouldn't say that was quite a bubble at that stage. I mean, we also look at certain scenarios that we expect to play out in Nigeria over, say a decade. At this stage now, the Fed has decided not to resume tapering, and right. Kind of saw Nestle doing 20%. And now we are looking at possibly, the sector coming off maybe 20% or 18% to be exact. And then it depends what you call a bubble, given the opportunity cost of if you exit, are you going to be able to re-enter at a favorable price? And
bubble or no bubble, though, I think we both concede that there's definite growth in the sector. Perhaps let's unpack that growth a little bit. And I want to look at food versus non-food items, where we're seeing them going in opposite directions in terms of their growth trajectory. Tell me what's happening there.
Well, I mean, essentially, at the current base, where Nigeria is right now, for example, the sector itself, about 77% of the revenue is generated from food,
right.
Food and beverage. And typically, that's where your market is, because of the income levels, well, essentially, we all can only consume so much.
Yeah.
But as the incomes rise, once again, you can only consume so much, and as a share of wallet, food consumption will taper off in favor of your non-food, your home and personal care products, right. and maybe later on your electrical goods. Observed overall for the Nigerian economy, yes, we see food declining notably.
Yeah.
Less so for our sector, mostly because we have your Unilevers and your Nestles, which are branded products.
Yeah.
Those we do expect, though, to sort of maintain share of wallet or gain as incomes rise.
So you're saying that if we were to look to the future, that branded products are likely to outperform non-branded products across the sub-Saharan African markets?
Well, certainly. I think just given the trends that we've observed with an emerging or a middle class, you want to consume, you want to achieve a better standard of living.
Right.
You want a better quality for nutritional or health purposes or for convenience purposes. And when a product is branded and subconsciously you see the brand, you know that all that there is entailed in that brand. You're generally going to go for that brand.
Of course, one of the things you touched on when you're talking about rising incomes per capita is that this movement from non-food items or from food items to non-food items. But maybe let's look at food items. There must be also a movement from basic to high value items. Where do you see the future of that in terms of businesses that should be perhaps modifying their offerings so that they can tap into that opportunity?
Well, it's interesting you mentioned that. I mean, it's something that Tiger Brands is trying to do with Dangote flour, and it's essentially before that, they have non-branded offerings and supplying your sort of your retailers or your small bakeries, that sort of thing. But add some value to it, get the market to understand that this is value for money, and get some sort of loyal following or some sort of a set market and then that way you are able to sort of keep up with the changing the changing taste and not get left behind. But you also have other companies that have a very good exposure, well-placed exposure.
Yeah.
Like USN, for example, you know, they have an asset, Grand Cereals, which is, well, as we all know, with cereals, even right now, Tiger Brands is there as well in cereals, and I've done a bang-up job out here. Not necessarily a staple. It's a bit of both,
right.
As there's a health factor there as well. So there's an element of, you know, the middle class aspires to consume that. They also have meat products, which is another sort of a food group that we see benefiting from high incomes.
So the richer, as people get more richer, they're moving from eating the staples and consuming more meat and the likes.
Yeah, certainly.
Unfortunately, we have run out of time, but certainly an interesting conversation. Hope to pick that up with you in the near future.